Hi, this is Rob Petrozzo from Rally. You're watching Taking Stock.
Counting down to the close today is Tuesday, October 14th, and this is Taking Stock. I'm Ashley Mastronardi. I'm so excited to hang out with you for the next 30 minutes and talk markets. Lots of news moving those markets today. The Dow Jones rebounded sharply today, recovering from a steep drop of over 600 points as investors look past escalating U.S.-China trade tensions, while the S&P is down a bit, showing more modest moves. Tech stocks like Nvidia remained under pressure. Earnings season is upon us, and Citigroup and Wells Fargo popped more than 3% and 7% respectively. That's thanks to better than expected earnings. JP Morgan and Goldman Sachs also beat estimates. Today on Taking Stock, we're going to catch up with Chris Versace of Temita Research and today's closing bell ringer, Embraer CEO Francisco Gomez Nito, plus a look at the new Halo Collar 5, an NYSE technology deep dive with Anna Mello, and the latest from Money 2020's Scarlett Sieber. We're counting down to the bell, just a moment away. Embraer is doing the honors for the close, here to celebrate their 25th listing anniversary on the New York Stock Exchange. Let's go up to the podium and hear them ring that bell. Fun fact, the opening bell is 10 seconds and the closing bell is 15 seconds, followed by 3 gavel bangs. Let's take a look at how the markets closed. The S&P 500 is down 0.16%. The Dow Jones is up 0.44%. The New York Stock Exchange Composite is up about 0.5%, and the Russell 2000, which recently hit a record, is up 1.38%. I'm going to bring in Chris Versace. He is the Chief Investment Officer at Temita Research. Chris, welcome to the show.
Thanks for having me.
All right, so what is your take on Trump's China tariff talk, and what impact do you think that this is having or could have on the market long term?
So we have to remember that President Trump and Xi are expected to meet in South Korea, and I think what we're seeing is some classic game theory where there's a pre-negotiation ahead of the actual negotiations, kind of some poking, some prodding, some testing, if you will, kind of to see who is willing to back down or if the other side is willing to remain firm. And I think that's going to help set the tone for the conversations that the two will hopefully have later this month.
All right, and what impact do you think, if this continues on, it can have on the markets?
Well, I think that the market is, the way we saw the market react from the back and forth over the last couple days is, oh, I'm going to do this, here comes 100% tariffs, oh, things will be fine. You notice there's a little bit of a roller coaster rise, some volatility in the market. And I think to the extent that we see more of this saber rattling between now and the eventual meeting, we're likely to see the market remain volatile. The only thing is, it could be at a time where we've got a Fed meeting and we have earnings accelerating.
And a government shutdown.
And a government shutdown,
yeah. We're 14 days into this government shutdown. Some experts are predicting it can go up to 33 days. What kind of impact do you think it could have if it goes on that long on the markets and on the upcoming holiday season?
So the longer it goes on, the greater the disruption that we're going to see, right? So if you just think about the government being shut down, the longer it's on, the more protracted the time it's going to take for it to fire back up. In other words, companies that serve the government contractors, that sort of thing, they are going to hit a bigger speed bump than others that we're seeing out there right now. So I think that we'll have to take stock of that. See what I did there? Take stock of that. So I think we'll need to really understand what the size of that speed bump, not just with them, but over the larger economy as well. That includes consumers, because of the number of people that are furloughed. The longer that goes, the more likely we could see a hit to consumer spending. We also have to keep an eye on these massive layoffs that were touted. We've seen about 4,000 plus layoffs happen. This could be a little bit of a headwind to consumer spending and the holiday shopping season.
speaking of that holiday shopping, you just raised your Apple target to $275. The stock is currently around $247. What is behind the call, and how big do you think this foldable iPhone story is?
So we raised our price target on Apple for a couple of reasons. We knew that Taiwan Semiconductor came out with very strong September sales. That's obviously good for AI and data center, but also it confirmed the seasonal strength that we would be seeing in smartphones. Yesterday, IDC came out with their initial third quarter estimates for smartphone shipments. Those were up very nicely, both on a year-over-year basis and sequentially, but Apple took share, and that tells us that the initial reception to the iPhone 17 family is probably a little stronger than folks were thinking. And then we have some confirmation from some other data points, most likely some key display technology companies and forecasts that have been upsized as well. So we kind of triangulated all of that and raised our price target for Apple.
And which stocks look most attractive near your pickup points after last week's sell-offs? And what are your pickup points? What does that mean?
Yeah, so it's a great question. So when we manage the portfolio for the Street Pro, we don't necessarily scale in or buy a full position off, when we start a new position. So what we try to do is identify points where on pullbacks we might be inclined to add to a position, hence the term pickup point. Now, after last Friday, there are a number of stocks that kind of sold off. We saw a bounce back on Monday. We're down a little bit today. So, the stocks that are, near our pickup points, companies like Costco, companies like Dutch Bros, that sort of thing. And I particularly like Costco here because we are moving into the holiday shopping season. They really help consumers stretch their disposable spending dollars. And at the same time, when we look at Costco's monthly comp sales, up very nicely in September, and then we look at Albertsons grocery store where their identical sales were only up 2.2%, kind of small. We think Costco continues to take share.
All right, thank you, Chris Versace, Chief Investment Officer at Tamikta Research. Thank you so much for joining us.
Thank you.
Okay, we're going to take a walk. We are walking through the floor of the New York Stock Exchange. We are heading to the New York NYSE notables. All right, we're just gonna go to our notables now. First, we're gonna take a look at Wells Fargo. The bank posted strong third quarter results today, beating expectations with earnings of $1.66 a share on revenue of $21.4 billion. That's up 5% year over year. That sent the stock to close much higher. The bank reported a net income of $5.6 billion, boosted by growth in both interest and non-interest income, a sign that its diversified revenue streams are driving results. Wells Fargo U.S.-focused strategy continues to pay off, with over 95% of its revenue coming from the domestic market. Okay, we have those notables up. That's Wells Fargo. We're going to focus on Walmart now. This is our second NYSE notable. The retailer, which trades here at the New York Stock Exchange under ticker symbol WMT, popped more than 5% in today's session. This after news of a partnership with OpenAI. Customers are going to be able to shop and purchase items directly on ChatGPT using an instant checkout option. That's pretty cool. Customers will also be able to use natural language to interact conversationally with ChatGPT in the search bar. The dollar amount of the deal was not disclosed. Now, some exciting news for pet parents looking to keep their pups safe. I recently sat down with Halo caller Seth Solomons and Ned Mavromatis to talk about the brand new Halo Collar 5. Take a look. Halo Collar today is a one-product company, and it's a product they say they've perfected, known as a leader in GPS-enabled collars and GPS fence technology. Halo just launched the 6th generation of its smart collar, Halo Collar 5. Here to share more are Halo Collar CMO Seth Solomons and their CFO Ned Mavromatis. Welcome to the New York Stock Exchange.
Thank you.
Hello, Ashley.
Seth, tell us about Halo Collar's mission and why it's important.
Ashley, our mission is very simple. but I think very ambitious. We exist to keep dogs safe, healthy, and living longer lives. It goes back to an incident affecting our co-founder and his family. Unfortunately, his niece's dog escaped their in-the-ground wired fence and was hit by a car. He had spent many years in the IoT space and redirected all of that experience to building Halo as the safest GPS fence.
And how does Halo Collar 5 compare to earlier versions?
A couple of things. Most of what we do is a combination of trying to innovate on the product side to make it as powerful as possible and listening every day to our consumers. So there are really three main things. First, the collar gets 20 location updates per second. So if you can imagine, when I open my back door, dog runs very fast. In a very short period of time, they can run 5, 10 feet. We're giving the collar 20 location updates per second to make sure we know exactly where that dog is. Second is 48-hour battery. Our consumers told us that some days they forget to charge their battery. So we did everything we could to give them 2 full days of battery. And then if they do forget, we've made the battery chargeable in 1 hour. So they won't be without the collar for very long.
All right, and what does the collar do for dogs? What are the features of it?
So the collar keeps the dog contained. Every dog needs to be contained, whether they're 3 months old or 10 years old. You want to make sure that your dog is safe. Different from traditional in-the-ground wired fences, Halo is something you can build anywhere. So anywhere you go, you can build a fence. If you go on vacation, you go to the beach, you're on an RV trip or camping, you can build a fence anywhere you go. Very different from traditional in-the-ground wired fences where you really have one location. The other thing is price. Many people can't afford the $3,500 to rip up their backyard and put wire in the ground. So for $599, you can have the Halo Collar 5.
And then what is the market opportunity for Halo Collar?
I mean, it's a very large addressable market. In the US alone, there's over 85 million dogs and over 450 million globally. Also, if you look at in the US, 1 out of every 2 households has a dog. And if you look at consumers with over $100,000 in income, that's nearly 2/3 have a dog. As Seth mentioned, there are 10 million dogs that get lost every year, and unfortunately 1 million get hit by a car. Since inception, we sold approximately 500,000 collars. So if you look at sort of the 85, $90 million dogs in the US, we're at very early stages of market penetration, and we have a lot more dogs to keep safe.
Seth Solomons, CMO of Halo Collar, and Ned Never-Mattis, CFO of Halo Collar. Thank you so much for joining me at the New York Stock Exchange.
Thank you.
Time now for a few fintech, crypto, and AI headlines. First, the crypto majors continue to slide today on the US-China trade war concerns, with Bitcoin, Ether, and Solana down between 2% and 4%. Next up, as we previously reported, Walmart is partnering with OpenAI to let customers shop directly through ChatGPT, marking the retail giant's latest push into AI-powered shopping. And Citi plans to start holding Bitcoin and other digital assets for clients by 2026, signaling Wall Street's growing embrace of crypto under a more supportive U.S. regulatory climate. So joining us now is our esteemed bell ringer, Francisco Gomez Neto, President and CEO of Embraer, who just rang again the closing bell. Welcome to Taking Stock.
Oh, thank you very much. Great pleasure to talk to you.
Likewise, how did it feel to ring that closing bell?
Oh, it's amazing. It's amazing. It's a great opportunity for all of us. The team was super energized. We're so happy here celebrating 25 years of listing on the New York Stock Exchange.
What does that 25 years of listing represent for the company?
Well, I mean, this 25 years were super important for Embraer. We are now in our best moment with remarkable sales, remarkable orders and profitability. We are very happy with this moment.
That's right. Your stock has grown about 78% over the past year. What do you attribute that growth to?
I think because of the results we have delivered in the past years and the perspectives for even better results in the future.
All right. Tell me about some of those results.
Well, I mean, we are now, as I said, a record of backlog with $29.7 billion of new orders. I mean, more sales in all the business units we have, commercial, executive, defense, and services. And in parallel, we are investing we are making strategic investments to prepare the company for a new cycle of product development.
And I understand that sustainability is a core part of your mission. Can you tell me how you are working that into your business model?
Well, we are developing the eVTOL, the full electric vertical takeoff and landing aircraft. That's full electric, zero emission, and preparing our aircraft to fly with SAF that we expect to be certified until 2030.
All right, and you just changed your NYSE ticker symbol. It used to be ERJ, and now it's EMBJ. Why did you decide to change it?
Yeah, because ERJ means Embraer Regional Jets. Today we do more than that. Our U-95 has 146 seats, so now we believe for the moment of the company, Embraer Jet fits better than ERJ.
And I hear you saying that you're doing a lot. I know that you're in commercial aviation, military, private aviation. Can you just take us through the areas that you serve and what you're doing?
Well, in commercial aviation, we have announced several new orders for our new aircraft, the E2, to companies like Avelo in the US, LATAM in South America, SAS in Europe, ANA in Japan. Business jet, we announced that we signed a contract in February this year of $7 billion with FlexJet. In defense, our KC-390 is now the aircraft of choice among NATO members and allies in Europe. So we're super happy with the development of our new products.
What's next for Embraer?
Well, now we are investing a lot in new technologies to be prepared for a new cycle of products in the future.
All right, thank you so much, Francisco Gomez, Neto President and CEO of Embraer. Thank you for joining us on Taking Stock.
Oh, my pleasure. Thank you very much.
All right, and congratulations on ringing that bell.
Oh, thank you.
Was it your first time?
Second time.
Second time.
Second
Okay,
time.
did it feel any different than the first time?
Every time is better.
Every time is better. Every time is exciting. Were you
Exactly.
opening bell last time or closing bell?
Now open.
Opening. Okay,
Yes.
so you did both an opening and a closing.
Exactly.
Awesome thing to do. Thank you so much again for joining us. So coming up, the latest on startups, raises, and rounds, plus a look at 232 years of technological innovation at the New York Stock Exchange with Anna Mello. Welcome back to Taking Stock. Today's in startups raises and rounds. First up, Goldman Sachs is buying industry ventures for nearly $1 billion as investors look for new ways to cash out amid a slow IPO market. Next up, fitness app Strava, which I'm a big fan of, last valued at $2.2 billion in May, is planning to go public after surging to 50 million users. And San Diego-based Mirador Therapeutics has secured $400 million in one of the year's biggest biotech deals, lifting hopes for a sector recovering from a slow first half. Now we're going to shift gears and we're going to take a look at 232 years of technological innovation on the NYSE trading floor with curator of archival exhibitions, Anna Mello. Check it out.
This year, the New York Stock Exchange is celebrating our 232nd anniversary. The history of the exchange has always been a history of technological disruption. As capital is raised, shares are traded, and information is disseminated with the public, it is always using the most advanced technology of the time for over 2 centuries. When the New York Stock Exchange was founded in 1792, trading looked far different than it does today. We operated as a call market, which looked a lot like an auction. The president of the exchange would stand at the front of a room and he would call the name of individual securities to be traded in increments of 5 minutes each. Asking price, actual price, and final price were all recorded in a quotation book just like this one, dating from 1819. The stock ticker, the first market-specific invention and arguably the technology most closely associated with the markets, was introduced to the New York Stock Exchange in 1867. Up until the 1990s, when traders adopted the internet, stock tickers provided vital market information to businesses and news organizations. A stock ticker is essentially a specialized telegraph that prints an alphanumeric symbol onto a piece of ticker tape, alongside the current price of a company's stock. This particular example is one of the earliest stock tickers used at the New York Stock Exchange, dating from 1880. It was able to print 250 characters a minute. The New York Stock Exchange nickname of the Big Board derives from our original broker paging system, the Annunciator Board, installed in this building in 1903. Each of these Annunciator numbers was painted with an individual member's broker number and arranged on either side of the trading floor in racks 800 square feet each. With the press of a button, one of these flaps could be flipped over, alerting a broker on the floor to the fact that he had an order waiting with his clerk. These were eventually replaced by an electronic paging system. The original high-speed data network of the New York Stock Exchange was installed in our current building in 1903, a pneumatic tube system that sent trade tickets all around the exchange. Executed trades were written or typed out onto a slip of paper and then inserted into this tube called a widget. The widget was then placed inside one of these terminals, each labeled with its destination, and then a puff of compressed air from the compressor down in the basement would send it off to its destination in 15 seconds every time. By 1979, the information age was fully underway, and in order to remain cutting edge and relevant, the New York Stock Exchange had to innovate itself. From 1979 to 1981, on the floor of the exchange, over 15,000 pounds of cathode ray tube television and computer screens were installed, all supported by our superstructure. During the renovation, not a single day of trading was lost. All of the construction went on behind the scenes, and new trading posts were installed over the weekends. Innovations and advancements in technology such as this allowed the New York Stock Exchange to achieve a market cap of over $1 trillion by 1980. Handheld touchscreen computers have been used on the floor of the New York Stock Exchange since the mid-1990s. This Epson handheld computer from 1997 ran the card reader replacement tool, which allowed staff reporters on the floor of the New York Stock Exchange to report outcry trades on the tape. Advancements in technology and increases in computing power such as this facilitated the New York Stock Exchange to achieving our first 1 billion shares day on October 28, 1997. Brokers and designated market makers on the floor of the New York Stock Exchange utilize an advanced high-speed data network and state-of-the-art technology to execute over 1 billion shares a day. Our new integrated trading technology platform, NYSE Pillar, was completed in 2023 and allows member firms to connect to all NYSE equities and options markets. Pillar improves efficiency while reducing complexity, while enhancing consistency and performance for all of our customers. What will the future hold? We are excited to see what's coming over the next 200-odd years as technology marches forever onwards and upwards.
Welcome back to another episode of Hindsight 2020. I am your host, Scarlett Sieber from Money 2020. And on this episode of the Wayback Machine, we're going to rewind on that VHS back to October 1857. That's the way back machine. Picture this. America's riding high on the railroads, land grabs, and California's gold fever. But then, bam, the Ohio Life Insurance and Trust Company collapses in August, exposed for cooking the books like a bad Enron prequel. By October, it is full-blown chaos, and we're not talking about the digital crisis of today. Banks in New York and beyond suspended specific payments. That's fancy for, sorry, no more gold or silver for your paper money. Runs on banks turns into stampedes. Folks are yanking deposits faster than you can say subprime 1.0. Unemployment spikes, farmers default, and the whole mess ripples to Europe, where the Crimean War's aftermath has already had economic wheezings. It's the first truly global recession, triggered by speculation, fraud, and zero oversight. Sound familiar? Yeah, regulators were napping then too. Fast forward 16 years to October 1873. September kicked off the panic when J. Cook Company, which was the Goldman of its day, implodes, trying to fund railroads that nobody needed. Stock exchange shuts down for 10 days. But October, that's when the real pain hits. Bank reserves in New York plummet from 50 million to 17 million bucks. Failures cascade. 55 railroads belly up by November. Businesses fold like cheap suits. 18,000 gone by 1975. Unemployment skyrockets to 8% nationwide, with a quarter of New Yorkers out of work, sparking strikes and riots that make today's protests look like tea parties. Europe catches the fever too. Vienna's bakes tanked first, then it spreads like a bad flu. Wages slashed, construction halts, real estate craters. This long depression drags on for years, flipping politics and killing Reconstruction in the South. So what is this takeaway from the October nightmares? Markets love a bubble until they don't, and when they pop, it's usually the little guy who's holding the bag. Whether it's in railroads or crypto, over-leverage and blind faith are eternal. Remember, history doesn't repeat, but it does rhyme. Back to you in the studio. Stay solvent, folks.
Thank you for watching Taking Stock. That's going to do it for today's show. You can catch NYSE live tomorrow morning at 9 a.m. with me. I'll count you down to the open. Thanks for watching. We'll see you tomorrow.